Hey, proofers. My name is Jaymes. I go by Ski God on the Discords, and I have been a member of Proof for a minute now. Not definitely not since Mint. I was one of the few that bought at 80 ETH when ETH was like 3K. Have been riding it into the ground ever since, and just bought a second pass down around the 10 ETH area. Um, but I've always loved Proof, Moonbirds, everything kind of going around that project, and with all the stuff that's gone on with it over the time, I've stuck around and plan to stick around to see what comes of it. I was actually in the at the New York City events last year. Won't be making it this year, but yeah, I thought that it would be a good time because so I'm a futures trader. I've been doing it for about 10 years now, after playing poker professionally prior to that, which is probably a story you've heard before. And I thought it would be a good time to, as I've reevaluated things come quarter end for myself, I'm always looking to reflect on not only, my last quarter, but my last year, my last multiple years, to kind of think about the things that have helped me along the way, what I've learned, what I'm trying to do, how to keep things interesting, and to build momentum moving forward. So I thought it'd be cool to make a little video for you guys on the top 10 things. Um, I don't know if it's the top 10, but 10 important things to me when it comes to trading, investing, kind of psychological, some uh, some psychology type tips, and some maybe more actionable items. They're not going to be in any specific order in importance, but I had 10, maybe 11 things I've written down that I just wanted to cover. And I thought they might be able to help you on whatever part of the journey you're on when it comes to NFTs or trading or investing or whatever, that I've learned over time that I thought I could provide some value to the proofer community. Do with it what you will. Skip the video, listen to the whole thing, whatever. So I'm going to jump into it. We're here in my kind of at home trading studio setup. Not that I'm a streamer or a trader or anything. I work privately, but I have made some random videos before for fun, and I enjoy doing them. So put a little background here, and yeah. Anyways, let's jump into it. Uh, Number one, and a few of these you're going to have heard, right? Because they're very obvious. And if you've ever read like Market Wizards, it's a kind of a book that relives a bunch of lives of very successful traders, and kind of you see some overlap with uh, some of these tips, right? So let's get that one out of the way. Is risk management, right? One thing as a poker player, I always like to analogize it with is the idea of never having to give up your seat at the table, right? Like sometimes a poker game is going to suck, right? You're going to have a lot of professionals at the table. The action's going to be slow or whatever. But if you kind of get kicked out of that game and you know that there are some quote unquote recreational bad players coming, to get back into that game could be very difficult to do, especially if you have no money left, or if you decide to step away for a while, or you don't really know what's going on. Like, you want to have your seat at the table for when the game gets good. And if you don't manage your risk during the tougher times, during the bear markets, um, during the times where you have to play defense rather than offense, you are not going to be prepared to take advantage when it gets good, when the good players come, when the opportunity comes your way. So I always think about it like that when I'm going through a period of time where things are slow, difficult, a grind, is that all I'm trying to do is protect my seat at the table. And that's what risk management's for. And that's why, a lot of these guys that have made $1 billion, they've lost just as many trades, whether they be long-term, middle, swing trades, short day trades, a few seconds, or whatever. They've lost 40, 45% of their trades as well, but they are very, very good at keeping their seat at the table and hammering it home when the opportunities that they do like come their way and they're able to be aggressive. So risk management, like, really understand how, and we'll get into a little bit more of like how to match your personality on kind of your risk tolerance and your playing style and stuff, but you need to understand your plan for your risk. For example, I like short stop losses, right? Because I don't mind 100 stab wounds if I can survive that and move on and thrive, right? Some people don't like that and they want to give themselves more breathing room in a trade. They want to see things play out through the noise. I prefer knowing that, like, hey, if it hits my stop, I was wrong, right? Something about my idea of the trade was wrong. And I expect trades to go in my favor quickly. And when they do, I excel at letting those winners ride and having a clear vision of what I'm expecting out of the trade and things like that. But you need to understand who you are on the risk scale, right? Of what you're going to want to do and how you're going to protect your bankroll. It's a very broad topic, risk management, and you've heard it. But a lot of people just do not abide by that, and they will for a while until a few decisions go wrong, and then that plan goes out the window, and they finally all of a sudden they have their whole bankroll in on a trade, and they have conviction. But the markets are savage, and they understand how to test you and test your bankroll, and that's how you'll go bust. So risk management, I'll keep it kind of topical like that, but super important. And you'll see that in these books overlap through every single person. There's not one successful person that's like, you know what, now just go all in. Don't worry about the downside. If you have enough like conviction and reasoning, just go for it. No, that's not true. So feeding off that, we'll go with number 2, and that is finding out your personality as an investor, right? Mind you, I just said I'm pretty risk averse, right? You're not going to find me sports betting too much or uh, gambling in the casino on games against the house or whatever, right? Like I need some sort of feeling of an edge or that it's a smart decision, educated decision on kind of what I'm doing here. I don't like constantly losing, right? So I I know that that's how I'm going to make the best decisions and stay in the best mindset throughout my session, throughout my week, throughout my month, my year, my career. So, because of that, that's how I build my template for how I go about my trading. Now, some other people are able to deal with risk very well. Like they can deal with swings like you might hear these people referred to as like robots, right? Like people who just can weather the storm and like don't bring any emotion into it and blah blah blah. Like we all have emotions. We all um are human and have to deal with that. We just deal with it in different ways. We internalize it in different ways. We express our emotion in different ways, right? I understand that I get very competitive in my trading and I'm pretty chill when it comes to everything else in life. So if I start to take the volatility to the face and get out of my lane, right? And start taking more risk because I've realized some other people are maybe increasing their stops or taking on bigger size than normal because they can deal with it. And I want to be like that. I will inflict this pain onto myself and I will make poor decisions and it will mean more to me and that will snowball into other mistakes. And I will express my frustrations with that when I'm losing as trying to control the market and doing even more to try to combat the inner tough feelings of losing, right? So my way of dealing with loss is trying to exert that control back into the market to make more decisions. And that once I'm aware that I'm doing that, I realize I'm in a very bad place. So I have it's interesting working from home because I used to work on a trading floor in an office in Chicago, is that now I can kind of really be in my own zone, be in my own flow, stay in my own lane and not have to worry about the guy to my left and the guy to my right feeling like, oh, what are they doing? How are they playing? And you'd see that on Twitter, right? People posting graphs and charts and percentages and perpetual futures and all this stuff. And you can start to imagine like, oh, they must be winning so much. What are they doing that I'm not doing? And, they're not posting the L's, right? So really think about who you are, what's your personality, what suits you best. And maybe playing wide stops and being overly aggressive and stuff really does suit you. And that's how you really build up bankrolls and how you expand your winnings, even though you're going to take some bigger losers. But the fact is, you're going to be able to deal with those losers better than other people. So definitely take some time, reflect on that, and kind of write down who you are, what your goals are, and it'll be easier to kind of plan forward. Okay, so number three, I would say this goes along with staying in your own lane, and it's an interesting one. In so many things, you hear focus on your weaknesses, right? Plug your weaknesses, plug the holes where your profits are going. But I heard, I think it was like Gary Vee a long time ago, actually, where he was like, fuck that. Like nobody is doing enough with their strengths. They're not quadrupling down on their strengths to really see where they can push those before focusing on the weaknesses once you've kind of peaked on your strengths. And I thought about my trading and I was like, that's really true. I have not pushed the things I'm very good at in trading. In fact, I'm always trying to fix like these weaknesses that going back to trying to be like other people, like I think it's a weakness of mine to not be able to handle as much risk as somebody or whatever. And I would try to be working on that constantly. Like, how can I maybe take more risk and whatever? And I never really just said, like, no, this is what I'm good at for now. I need to double down and triple down and figure out how to expand my trading, my results by just focusing on what is Jaymes great at? Like risk management, riding winners, getting precision entries and possible precision exits, right? Where can I size up there, taking even less risk to get even bigger winners? I'm also good at doing a lot of trades at once, right? I can be in 5, 6, 7 trades at once and kind of be managing them in a way where I'm not losing control of everything that's going on. That goes back to my poker days of being able to concentrate on a lot of hands at once. Whereas some people might need to really be honed in on one trade and watching the ebb and flow of it. Right. So instead of me trying to expand my risk and maybe doing it all in one trade, I need to be doing lessening my risk, which I'm pretty good at, getting precise entries and managing a lot of trades at once and potentially upping my bottom line from there exponentially. And when I started focusing on that, I really kind of took off in my career. I've talked about this before, but and I still don't think I've expressed that to the peak of my abilities when it comes to my strengths. So it's something I'm always working on. And yes, after 10 years, I am trying to be better about cleaning up some things that I have issues with, but I still think it's minimal compared to what I'm leaving on the table when it comes to what I'm good at. So something interesting to think about. I think when you're a professional golfer and you're the best putter in the world, like, okay, maybe you can start working on your driving. But if you were just average if you were like okay at putting and you're okay at irons and you're pretty bad at driving, maybe you should like become the best putter in the world and become the best iron player, and your driving wouldn't affect you as much. And maybe you can still win that way rather than trying to become a jack of all trades but master of none. So I'm trying to master my strengths before trying to work on my weaknesses. So that's number 3. Number 4 is sounds easier said than done, and that's just letting the game come to you. A lot of the times in trading or like whatever style you have, somebody put it really well to me. I like analogies. So like somebody put it well to me is like you're at a bus stop waiting for your normal bus, and the bus is just not coming. It was coming before, you were getting on it every day, things were working out, everything's jiving, and then all of a sudden it's not coming. And then it's not coming for a week and a month, and all of a sudden maybe you're losing, you're breaking even, and you're just wondering like, maybe I should go to that other bus stop. Maybe I should switch up styles. Maybe I should try something else because whatever I was doing before isn't working in this regime. That can be true. And there can be times where you do need to switch it up. You need to adapt to the new conditions because it's going to be that way for a while. However, somebody told me this bus analogy once is that like that often once you've kind of waited so long and you finally decide, all right, I'm going to go to that other bus stop, the bus finally comes back to the stop you were at before. And everything's very cyclical. And what you work well in one regime may not work well in another. So what I've focused more on is trying to identify which regime I'm in and whether or not I should be things are working and I should be pushing it, or things aren't working and it's time for me to kind of go back and start buttoning things up and putting my focus elsewhere, maybe on research or looking at assets that I hadn't looked at before. But instead of forcing the issue at hand, like things are kind of slow, I'm going to go to this other bus stop and try to like play around and again exert a force on the markets and try to make something happen. Whenever I've done that, it usually ends pretty poorly. It can work. You might go find something else and be like, oh man, thank God I looked. But I, for myself personally, have felt, all right, I need to just sit in the pocket at this bus stop and wait, and the bus will come back. And often it can take a while, right? The ways markets ebb and flow throughout an entire year are very different. There are going to be months where you think, man, trading is hard. It's boring. There's nothing going on. Like it's over. It's never going to be good again. And then sure enough, you get some Ukraine invasion, or you get some crypto regulation, or some short squeeze, or a FTX fail, and all of a sudden volatility's back, right? And the things you were doing before start working again. Now, again, what did you do during that slow time? Did you lose your seat at the table? Did you burn a ton of money? Did you lose a lot of your bankroll? Because if you didn't, and you were patient and you were learning and you understood that you were in a regime that your style wasn't working at, well, you're ready to attack now. You have that capital ready to go. So these all tie together, right, to make a complete trader, investor, or whatever. But I just think it's important to kind of look at these and answer them to yourself truthfully, to get you to that next level. So let the game come to you. You'll realize that, like, time is long, like you don't need to make all the money right now. And often the more you pull back and allow the things to come to you, the faster you'll end up making the money, right? And the faster you'll end up saving the money from losing it, from letting yourself be in the way, be the problem. That's number 4. Number 5, let's dive back a little bit to the roboticism emotional thing, right? So many people are like, you do not want emotion when you're trading or when you're gambling or whatever. You're not going to be able to think clearly. You need to be a robot, beep, boop, beep, boop. I wholeheartedly now disagree with that and used to think that was the case. If you haven't read the book Market Mind Games, great one by Denise Scholl. She was if you watched Billions, the character Wendy in that, the psychologist at the firm, is based on her in real life. But anyways, her book really opened my eyes to the idea that, like, you're human, you're going to have these emotions. The trick is, the robotic part is being able to quickly identify the emotions that are going through your body, what it's causing you to do based on who you are and how you normally react to stress, and then allowing that to run through you, to express itself. And usually just even the awareness of it quicker than normal is what's going to end up saving you the money and allowing you to go back to a more state of homeostasis and the ability to start thinking clearly again. So I actually had a mental coach for, I don't know, 6-8 months, who is somebody that was under Denise Scholl, this guy, John, and he was great. And, we would take notes. I would take notes every day, and we'd have weekly sessions, and we'd talk about, like, okay, what were the emotions that arose, and when were they coming? Like, was it during times of volatility? Was it during slow times? How was I feeling and acting when I was losing as opposed to when I was winning? And really going from there. And then I was able to now, things that I wasn't paying attention to for the longest time, I was now able to start picking up quicker. Like, I had this thing where when I'd start losing, I'd start heating up, like physically. I would get hot, I'd like start sweating. And, I thought, I like looked at it as intensity and competition, right? And really it was just frustration and cortisol and stress just emanating from me. And I often this was when I was, losing big numbers. And so now, like whenever I start to get that kind of feeling in my body, where and it still happens, right? After 10 years, I'm still making tons of errors, losing a lot of trades. I make 100 trades a day or whatever, and I'm going to lose a ton of them, right? But when I feel that like heat inside of me, I step back for a second. I do some box breathing. I'll like get up, I'll go walk around and I'll be like, okay, I know that like there's going to be plenty of opportunities throughout the day, throughout this month, whatever. Let's not dig a huge hole for myself right here. I know that this feeling is coming up from that. I don't get that when I'm winning, right? Cool as a cucumber when I'm winning, because what do you have to worry about? Um, and again, I also would find other little things like this was a fun one. Um, I'd noticed that when things were going poorly, I would start moving my stops on my trades, right? I would have, let's say I planned a trade where I got in at $100 on some asset and my stop was at 95. I would come up with some reason because I was losing elsewhere to like move that stop to 93 or maybe to 91. And let me tell you, I can come up with reasons. I can make you believe that I should move that stop because of something changed in the market condition or the order book or whatever. But I realized over time that like when things are going well, I'm never moving my stops. I'm setting them. I understand why they're there, and I'm not adjusting them for pretty much any reason unless it's a very blatant change in the market structure, right? So now when I realize that I'm going and I'm moving a stop, I'm like, oh, ooh, why am I moving that stop? Is it because things are going well? Am I trading poorly? Let me think about what just happened over the past, you know, 5 minutes or an hour or whatever. So I'm recognizing the emotion quicker. I'm able to think about it and be like, that's happening. And because of that, I'm able to act more like a robot and pull out and just not have it affect me as much in the end because I'm not letting it overwhelm me and kind of subconsciously do all this stuff without thinking about it. So I think emotions are powerful and needed in order to become a great trader. And I just think that maybe the people who say that you should be emotionally disconnected or whatever are just very in tune with their emotions and are able to quickly deal with them and recognize them subconsciously to where it seems like that's what they are. And yeah, so I think that's something to really think about when you're like think about FOMO, right? Like when you are buying some NFT because you're seeing the price run up and you know some guy had bought 30 or 40 2 days ago and they're already 3x. Now you want a taste of that. Like see how that plays out. Once that's done, that trade or whatever you're doing, coin that you've bought or investment that you've made, let's say it's based kind of on FOMO, go look at the result of that eventually and really think back to that moment where you were feeling like the need to go buy it and realize like was that good, was that a good situation, or can you look back and be like, oof, like I really should have stepped back for a second and thought about that one, because it could be either. It could be a good FOMO feeling. You could kind of be like a little bit late to something but not too late, and like you're able to like manage that entry and exit well. But like it's important because, a lot of the times FOMO, you don't even have a plan. You just go do it. Right. And then somebody had a good saying to me is like, when you don't have a plan going in, you don't have a plan getting out. That's actually one of the other things I had down here is the top 10. So I'll jump right to that. So real quick, emotions, I think they're very important. I don't think roboticism in trading is a great thought at all. I think knowing yourself is the most important part about it and allowing the emotions to come so that you can recognize them faster so that you can deal with them and move on. Yeah, so I don't even, man, I forgot. Are we on number 5? Maybe that was number 5. So let's just say this is number 6 here. And that would be, if you don't have a plan going in, you don't have a plan going out. I'm very big on this. Okay. I'm making a lot of trades and the plan may be as simple as I think this number is going up in the next 10 minutes. I want to get in. or it can be a 10 layer information based on something I see in the order book, a fundamental bias that I have, a chart technical setup, individual player that I see acting a certain way. The price was seemingly oversold or overbought in one direction, like layer it all on. I got the perfect like that. You can build a story that way, or it can be as simple as a gut feeling. But then I need to know what's my risk to that trade, and then what do I expect from it on the upside? How long do I expect this trade to take? When it comes to a winner, let's say things were going right, where do I want to get out? Right? I want to have a plan of that too. It could be I want to hold it forever, but okay, do I want to de-risk myself if it gets on sides? If things are going well, do I want to take out what I put in? Do I want to take a little bit of a winner to lock some profits up and then let the rest free roll? All of these things I think through pretty much at the time before or during making a trade. Sometimes I can't think about it because that trade comes up really quickly. I have to take it, and then I have to think about that as quickly as possible for what's coming before the move keeps throwing me off. So my goal with the trade is always to have a plan, because if I don't have that, I am now at the whim of the market to tell me when to get out, right? And that will leave me with a lack of control, and a market will end up telling you what to do if you don't tell yourself what you want to do based on market conditions. You've probably felt that before. You get into something, let's use an NFT, for example, you pay 10 ETH, it goes up to 17 ETH. You have no plan of what you want to hold this forever. You want to double it. You want to take a small whatever. You have no plan. So you get in, it goes to 20 ETH, and you're like, oh, like, should I get out? Should I get in? Or should I like keep riding it? Like, what are these other people doing? What's going on Twitter? Is the Discord good? Am I missing some alpha? Like, what? Maybe I should take it off, but I only have one. Like, I don't know. And then it comes down. It goes from 10 up to 17, and it's back to 12. And you're like, fuck, like, it's going to 0. Like, I don't know. But are they selling? Should I sell? And you sell, right? And you take a 2 ETH profit because you're like, I don't want to lose. And then sure enough, like, your original trade idea was great, and it goes to 30 ETH. And either you have nothing now, or you end up buying at 30 ETH and end up losing on that trade eventually, because you can see how the market dictated your decision making there, rather than you having a plan originally saying, hey, I'm buying this for 10 ETH. I'm holding forever. I don't care what's going on. I have a stop set. Like, if the floor price is 7, I'll get out, or I'm riding it to 0, whatever. Or, hey, I'm buying this at 10. If it gets to 20, I'm going to take that. That's 10 ETH right there. The 10 ETH you could put to work in many other places down the road. And now you're free rolling on a lot of these other opportunities. You're thinking clear. You have momentum. The snowball is rolling. You can see how the plan will allow you to kind of settle with your decisions. And I think that's super important, especially if you're making a lot of decisions, right? I'm a big momentum guy. If things are going well, I want to push it. I want to use those profits to go into new profits and new ventures and explore and do some R&D in a different asset and play with those profits. But if you're always in this defensive mindset, this market pushing you around, you're never going to catch up, right? You need to take control of what you can control, and then like see what the market gives you in that sense, right? And you start to learn what markets tend to give you what, and that will help you make better plans, and it's all exponential from there. So hopefully that makes some sense. Let's move on to number 7. So 7 actually piggybacks. I like how these are actually starting to, now I see how I kind of wrote these, are starting to piggyback on each other, is pushing when things are going well and pulling back when things are going poorly, right? Kind of look at things seasonally, right? You're going to have summers where everything's running hot. You're going to have winters where everything you do, you're going to question everything. You're going to wonder if you're actually ever good at this. There's going to be long periods of lulls where nothing's really going on. Everything you do is just wrong. So it is kind of lockstep with momentum for me. Let's do another poker analogy here. One of the reasons I never really excelled in poker, whenever things were going poorly for me, I kept playing poker, right? I was always trying to dig myself out of the hole, but I was always in this negative mindset, making bad decisions. Game was controlling me. Had no plan for what I was trying to win or lose. I just wanted to keep playing so I could win some money and get out of the hole, or like get back at some player that got me, or whatever it was. that's when I was playing the most poker. When I was winning, I was taking it off the table and I was like going and blowing it, partying, spending money, whatever. And I wouldn't play that much. When I was making great decisions, feeling good, I was leaving the table. I never really learned from that. Right. I kind of knew about that, but I didn't do it. That's not how I lived. It's something, yeah, something I would have told somebody and not done myself, which is hilarious, right? That's happens in life. But I've completely flipped that script in a professional mindset with trading where I want to trade the least when things are going poorly. And I've found that I really enjoy like macro content and stuff like that, and hearing from a lot of opinions from a lot of people and starting to develop my own thoughts about where I think the world's headed and stuff. And that can take a lot of time to just take in all that information and digest it. So it gives me something to do when things aren't going well or they're slow in trading. And I need something else to focus on. Because if you left me there with markets that I'm staring at, I'm just going to keep acting and clicking. Um, so I've really been able to pull that back and find other ways to distract myself. On the other hand, when things are going well, I am locked in, making as many trades as possible that include a lot of trades that are more questionable because there's that I wouldn't normally take. Because there's something that I'm feeling and jiving with the market where I feel in tune with the flow of how things are working and understanding what I can expect as results for trades, the ranges of the markets where I think things are going up or down or long or short or whatever. And you just have this thing, right? This flow state, if you want to call it, like when things are going really well. And that's where you want to be pushing it. You want to be upping your size, right? You want to be gambling for more than less, rather than when things are going poorly and making bigger bets, right? That's how you lose your seat at the table. Always coming back to that risk management. Number one, don't lose your seat at the table. So when things are going well, often you'll win a bunch of money and then you'll take a fat loser there at the end. You will get that heat check, that humbling moment. And then from there you can kind of stop, assess, and be like, okay, I need to kind of rein it in here, get back to not, but if you notice, like you watch an NBA game, you watch Steph Curry, he makes 5, 6 3-pointers in a row. He's going to keep shooting until he misses. Eventually he does miss and he'll kind of go back to like playing the normal game. But as long as he's making them, everybody's looking to get him the ball and he's looking to get open and maybe take these shots that he wouldn't really realistically take when he's not just absolutely feeling it. Same thing here. So I think that's really important to flip the script on if you're the other way around and you find yourself really risking a lot when things aren't going well, but not risking too much when things are going well. Try to flip that on its head. Build that snowball of momentum, positive momentum when you have it, and really leverage your gut feelings there. Okay, on to the next one. Okay, let's do two more because I don't even know what number I'm on anymore. Let's say it's number 9. These last two ones were something that my mental coach and I came up with a long time ago that are a little more personalized, a little more unique than just generic things you might have heard on the outside world. Let's see. Let's do shadow boxing for the first one. One of the things I noticed when I would get in a mindset where like I'm frustrated, I'm trading well, things are starting to line up like loser, right? All the things I mentioned before are happening, but like things are happening in the markets and I don't necessarily want to stop trading because it's a volatile period. There are opportunities out there. We came up with this idea of like a shadow boxing round. So picture it as you're in a ring, right? You're boxing. First round, you get in there and your opponent just beats the hell out of you. All right, knocks you down. You're just getting jabbed, left hook, knocked down, barely getting up. Saved by the bell. You go over on your stool. And then somehow they give you the option where they're like, why don't you just take this round off? We'll send in your shadow version of yourself. Okay. And picture this like you saying, okay, mentally I'm going to still trade, but I'm not going to actually click in and trade. All right. I'm going to go say, what were the next 5 trades I would have taken? Or maybe just one or whatever. What was the next move I would have taken? I'm not going to do it, but I'm going to watch like, okay, I would have gotten in right there. This is what I would have wanted from the trade. Let's see how that plays out, right? A shadow boxing round, right? Like you're not actually in there doing it. You're not risking the money, but you want to see if like you're really just off the sauce right now. So you watch, okay, that trade failed. Okay, well, what would I have done next? there. Boom. That failed. Oh man, I'm really just not seeing things right. All right. And if that's the case, pull the plug. You might have taken a few breaths while you were sitting back there watching, right? Yeah, I'm really not seeing it. So now, you know what? Throw in the towel. Don't go back in there. That's it. You used your shadow round to really kind of analyze from a different perspective how you were doing, and you were doing very poorly. And you were correct in the idea of taking that round off, and you should stop. Maybe for the day, just the day, whatever. There's another day coming, whatever. Or that next trade you would have made, it would have worked. Okay, take one more. Okay. Wow, that one worked well too. You know what? I am actually seeing the markets okay. Maybe I just needed a little bit of a break, needed to recoup. Maybe that first two, three losses were a bit more flukes, so a bit more like, the trade ideas weren't bad. They just had bad kind of weird outcomes that I didn't expect. Maybe I had a bad sleep and it's affecting me more, but you know what? I am kind of seeing things well. All right, I'm going to get back in there on that third round. Real life, real trading, risking the money now, right? At least you took that second shadowboxing round off to give yourself a chance to step away if you needed to. But you kind of reanalyzed and you decided for yourself now, okay, I'm going to keep continuing. Now it might suck. You might end up losing more money and whatever, but you at least gave yourself that check, that necessary check. And that's been huge for me. I would just not stop, right? Like I was just like, where's the next trade? I need to get this back. And like I'm frustrated. I need to exert myself. I'm losing control, so I have to take control by going into more trades. Some people they don't need that. They don't express their frustrations that way. They're able to just step away and be like, no big deal. Another day. I got other things to worry about. Like I'll come back when I'm feeling good. And again, it goes back to recognize who you are, right, as a person. For me, that's very difficult to do. So I need to build in these kind of like checkpoints along the way to help me remove myself from what's happening in the moment. So I thought that was a cool one. Shadowboxing, number 9, 8, 9, who knows? Okay, let's move on to number 10. Number 10 is probably my favorite, and I call it my risk spectrum. You've probably heard risk on, risk off for like markets and stuff, but I think of it as a personal Jaymes risk meter. Okay. And on one end, I am risk on. And to me, this is a very bad thing. Risk off is a very good thing. And then there's a spectrum, right? And a lot of it comes down to like external factors. How did I sleep? How's my nutrition? Have I been working out? How's my relationship going? How are, things in the house? Is my desk organized? Are things cluttered? Whatever. And I would write this down every day in like a composition notebook. I would just do like a 1 out of 10 to 10 out of 10 on each of those categories. So I could be like in the morning, like, wow, I'm in a really good headspace right now. I feel great. My last few days of trading, I've won. Yeah, previous results also impact these numbers too, right? I'm like 9 to 10 out of 10 on all of these. I am risk off. Like things are looking good. I don't think anything is going to provide a huge risk to my success today trading. As opposed to that, drank, went out with the boys. House is kind of cluttered. The kids didn't sleep that well last night. Last few trading days have been rough. Markets have been slow. Just all of that. My risk meter probably pretty damn high to on. And if I'm on that meter, maybe I still trade, but I'm going to be very aware of that and understand that like if things start going wrong off the bat, I should pull back right away before really getting into it and giving myself the potential to lose a lot that day, because those are the days that negative snowball, that huge losing day could just pop out of nowhere when I had a little bit of a chance to curtail that by realizing where I was, right? And then on the other side, take the let's see, the little speaker's been working this whole time. But yeah, so when risk off and everything's feeling good, if I have those first few trades that are working out, right? Well, then I'm like, okay, this is the day to push it. Let's go. I'm seeing things well. I'm feeling good. And last few days have been pretty solid. I think it's time to really like that next trade that I think lines up pretty well, I'm going to hit my clip hard into that. Right? Normally, maybe I risk X, I'm going to risk 3X now because things are going well. And that's how you expand your bankroll to eventually raise your normal sizes to higher sizes, right? Is to be able to take advantage of those times you're really feeling good, positive momentum, spinning it up, and protecting your downsides on the days that you're not feeling great. So the risk spectrum to me, super important, super valuable to me over the last couple of years that I've been thinking about that. And again, you can just write those down for a few days and then you can kind of stop writing it down. You'll kind of be able to go through that checklist before you start making decisions each day. And it really was powerful. Yeah. So anyways, that's 10 things. I think it's 10 things. And I think they've all been super valuable to me. They're not specific trade ideas, but they're things that I can use throughout my trading career, throughout analyzing myself, where I'm struggling, where I'm excelling. Look back at your results, try to think about how you've done, what you could do better. But again, focus on your strengths and really, really push yourself in the areas that you are strong at and where that that's your personality. I hope this was valuable to some of you. I spend most of my time in this one Solana NFT group called Monkey Baby Business, and we have a Wall Street Corner Discord thread over there where we talk about a lot of trading, macro related stuff. That's where I spend most of my time, popping into the collective every once in a while. So if you want to DM me, feel free, or come over to Solana with the psychos like us. I feel like I'm kind of split between an ETH and a Sol guy. But yeah. Anyways, hope you guys are all doing well out there. Hope you guys have all found some success off the bottom of this bear market and that things are going well for you. Good luck to Proof and play well. See you later.